Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Alphabet Inc. quarterly report. Alphabet Inc.'s business overview. The company offers a diverse range of products and platforms across various segments. Key businesses and services include Google Services, Ads, Android, Chrome devices, Gmail, Google Drive, Google Maps, Google Photos, Google Play, Search, YouTube, app sales, in-app purchases, digital content, and consumer subscription services, Google Cloud, AI infrastructure, Vertex AI platform, cybersecurity, data and analytics, cloud-based communication and collaboration tools, Google Workspace, and other enterprise services, other bets, healthcare-related services, and internet services. The significant increase in Alphabet Inc.'s stock price over the past year can be attributed to several key developments. The company's exceptional quarterly earnings reports, which consistently surpassed analyst expectations with double-digit revenue and earnings per share growth, were a major contributor. Additionally, the accelerated AI-driven growth across Google's core products, including Search, Cloud, and YouTube, drove user engagement and revenue growth. The robust performance of Google Cloud Platform, GCP, was another significant factor, with revenues increasing 34% to $15.2 billion in Q3 2025, and operating income surging 85% year-over-year. Alphabet's increased capital expenditures for AI infrastructure, aimed at expanding data centers and enhancing AI infrastructure, also signaled strong confidence in future growth. Furthermore, strategic initiatives, such as the announcement of a first-ever dividend payout and a significant $70 billion stock buyback program, contributed to market optimism. The company's antitrust win allowing it to retain its Chrome browser was also cited as a positive factor for investor sentiment. Overall, these combined factors underscore a period of strong operational execution and market optimism surrounding Alphabet's strategic direction in the AI and cloud computing sectors. The primary drivers of revenue growth or decline for Google are multifaceted. On the growth side, key contributors include a significant increase in Google Services revenues, particularly from Google Cloud, which saw a substantial 34% rise to $3.8 billion. Additionally, growth in advertiser spending and improvements in ad formats and delivery have positively impacted revenue. Furthermore, an uptick in subscriptions revenues, driven by paid services on YouTube and Google One, has also contributed to the increase. On the decline side, a decrease in AdSense revenue was partially offset by an increase in AdMob revenues. Moreover, Other Bets revenue declined by 12%. These factors highlight the importance of diversification and adaptability in maintaining revenue growth amidst fluctuations in specific areas. Net income and profit margins. A shift in trends. The financial summary reveals a mixed trend in net income and profit margins for the given period. On one hand, net income saw a significant increase of 32% from $26,301 million to $34,979 million, and another notable rise of 33% from $73,582 million to $97,715 million. However, this growth was accompanied by a decline in profit margins, dropping from 70.6% to 66.3%. The reasons behind these changes are multifaceted, including the allocation of earnings between classes of shares and the combination of increased revenues and expenses. The company's financial performance indicates a strong ability to generate cash from its core operations. The net cash provided by operating activities has consistently increased over the past 2 years, with significant figures of $86,186 million in 2024 and $112,311 million in 2025. This trend suggests that the company is successfully managing its day-to-day business activities, resulting in a substantial positive operating cash flow. The company's debt level has seen a significant increase over the past period. Long-term debt has risen by 95% from $10,883 million to $21,607 million. In contrast, interest expenses have decreased substantially, with a notable drop of $19,528 million from 2024 to 2025. This indicates that while the company's debt burden has grown, it is managing its interest expenses effectively, resulting in significant savings. Management is optimistic about the company's outlook, expecting significant growth and expansion due to its shift towards the online world. Key strategies include investing in new businesses, products, services, and technologies, as well as increasing investment in AI products and services. The company plans to hire at a faster pace with competitive compensation programs and invest heavily in technical infrastructure to support business growth. Capital expenditures are expected to increase significantly in 2025 and 2026, driven by the acquisition of Wiz's cloud security platform, which will add to the Google Cloud segment. Management is also focused on managing foreign exchange risk through derivative instruments and addressing exposure from investigations and proceedings. Financially, the company has seen a strong performance with revenues up 16% year-over-year, operating income up 9%, and net income up 33%. These results demonstrate the company's ability to drive growth and profitability. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has a history of paying dividends to its shareholders, as evidenced by the total cash dividends paid section on page 32. Secondly, the company has also undertaken share buybacks, with references to this activity found on pages 8 and 53 under the summary section. Concerns surrounding inventory buildup and supply chain disruption. The company's financial summary highlights a pressing concern regarding inventory buildup and potential supply chain disruptions. Specifically, the Google Cloud segment is at risk of experiencing these issues. This warning sign is underscored by the reference to page 12, which provides further details on revenue backlog and deferred revenues. The implications of such concerns are significant, as they can impact the company's overall performance and profitability. That concludes the financial summary for Alphabet Inc. Feel free to comment below, and I will be happy to answer them when possible.